Hey traders, my name is Akil Stokes and I want to do a brief introduction before getting into this video. For you guys who don't know me, I'm a professional trader. I also operate the Triple Threat Trading live ratio room, which is a day trading room where we look at a 8-pair portfolio 4 days a week for about 3 hours a day. Now the room isn't necessarily meant to be a trading call type room, and although I do present many opportunities and let the members of the room know what trades I am taking, the main focus of the room is supposed to be a support room for either newer traders or struggling traders that want to see examples of how to trade ratio structures, harmonics, Fibonacci's in the real-time market and kind of grow themselves to becoming a professional trader as well. Now the reason I'm doing this introduction video is because after recording this week's content, I noticed that I messed up on a few of the days, meaning I think the chart may say Monday but it really is Tuesday, or I may say Tuesday and it's really Wednesday, and just want to clean house about that real quick so you guys aren't confused. More so, I'd like for you to pay attention to the actual lessons that were learned during the week in the room, and if this is something that's beneficial, I may do this every week. If it's not and the response is it was okay but didn't really learn anything from it, then it was fun doing it this one time. So I hope you guys enjoy, and if it's good, maybe we can make this a regular thing. So I was pretty pumped to start my trading day this Monday, and I wouldn't be disappointed. Not only did it end up being a very profitable day, but we were able to trade examples of all different types of setups and patterns, which is good since a lot of the traders in the room are either complete newbies to the world of trading or the world of ratio and harmonically based trading, or they just completed the Ratio Master Series or the Pro Trader course and are looking to relate what they recently learned through those courses to the market in real time. Of course, there are also experienced traders in the room, and it was a chance for them to rack up on some pretty good profits as mentioned earlier. So we're going to take a look at a few things that we looked at on Monday. First, I'm here on the pound dollar. Now the first trade we looked at today was a cipher pattern on the pound dollar. As you see, our first blue triangles. Now there's nothing really special about this example. As you can see, it was basically a pain-free trade. Market came in went about 10 pips at most under our entry, which is again nothing when stops are below X, of course. But what's cool about this example is that it sparked some pretty good conversation about how to pick targets, and we actually came up with an idea that may work pretty well. Now of course we're gonna have to go back and back test this idea to see if it actually makes improvements to the original rules of engagement that are already in place. And of course we're talking about a cipher pattern, so we know there's an 80% win percentage, so there's not much room to improve, but it may be worth looking at as far as minimizing risk and being able to roll stops earlier. That's something for the future though. But we got a good example of a cipher pattern, which a lot of the traders in the live room are looking for, and also gave a good example of how patterns form back to back. As you can see, right after our cipher pattern, we have a Gartley that formed as well. Now this Gartley ended up basically trading sideways. It didn't complete while we were in the room, so we didn't have to worry about taking it, but it was something we put on our radar at the time. Sticking to our pound pairs, let's take a look at I guess pound yen. Now pound yen, we also had an advanced pattern complete. In this case we had a bat pattern, X to A to B, B to C, C to D, normal bat pattern. Again, just like the cipher, a relatively pain-free trade. You can see the market never at all traded above our entries. However, this was a good test of trader discipline. Our stops were down, let's see, down right above here, right where our 618 retracement was, and you can see the market rolled right over. Everyone in the room is happy, pumped. Came within 3 pips of our first target, I should say. 3 pips within our first target, and then rolled back up. Now at this point we had moved our stop losses to break even, so back to our entry point. And again, basically we made the move from 3 pips to banking some profits to 3 pips away from it being a non-profitable trade, basically a break-even trade. So again, this was a great test of trader discipline, because traders had to sit through this move, had to sit through the market coming down, going all the way back up before finally coming down once again and allowing us to bank in and cash out for being good disciplined traders. The last example I want to take a look at is, let's see, New Zealand or Euro. Doesn't matter. We'll take a look at Euro dollar. Both pretty much the same thing. But Euro dollar provided us a great example of a Fibonacci and a structure based trade. As you can see, my charts are basically blank, no triangles, no lines, anything on there. Just basically reading price action. Now in the room I actually had my entry based off an 8 range bar chart, but this chart basically shows the same thing. Again, what we did was simply previously pick a zone in the market that we thought was going to provide good support, and wait for the market to come back up and retest that zone. So our entry was right around here, 124.86. Market gave us a little pain. You can see we entered on this big candle. Market shot right up immediately, taking us about 10 pips into the negative, trying to scare us off as traders. Came right back down to break even before shooting up once again. But just as in the last example, discipline paid off. Market ended up rolling over, hitting both targets. Target 1 around here somewhere, target 2 right down here. So again, Monday ended up being a pretty busy day in the live room, but like one trader said, that's okay with me. It just means we get to learn a lot. Seeing how Monday was a pretty busy day in the live room, it came as no surprise that Tuesday was a little bit calmer. Other than a Gartley pattern completion on the Aussie dollar that made a few traders some small profits, and a aggressive C on New Zealand dollar that ended up taking out for break even based on the close of our session, there weren't many valid trading setups that I was able to trade. However, today did prove to be a great day for explaining the importance of knowing the basics. Now when it comes down to it, there are 2 kinds of traders. There are trend following traders and counter trend traders. Luckily for me and the countless others that graduated from the Pro Trader course, we were taught how to do both. However, it's much easier said than done. Now I won't go into details about the psychological struggles or the mental dilemmas that come along with attempting to trade both ways, but let's just say that it's easier, especially for a rookie trader, to pick a single method and trade that one method only. Fortunately for myself, along with a handful of traders in the room, such as Lax, Joe, Neil, and Ha, just to name a few, we've gotten to the point in our trading where we can actually successfully and consistently trade both ways due to our knowledge and experience on price action and market harmonics. Also, mainly due to having a strict set of rules to follow in each situation. So why is this important, you ask? Well, if you have any experience in the market, you'll know that the market gives us both trending days and days of consolidation. Now, having the knowledge on how to recognize both kinds of setups will not only allow you to find valid trade setups no matter how the market is moving, but more importantly, having that knowledge of how price action works, along with having strict rules and discipline to follow those rules, it will allow you to stay out of those emotional traps. You know, the ones where the market's been going down forever and you say, oh man, I feel like the market's going to go up, only to see the market bounce up a few pips before sinking again and basically giving you a losing trade. Anyway, enough talking. I'm going to go ahead and show you an example of one of those setups. Here on Euro dollar, This was basically our trading day today. The market just going down, and of course trending down, starting from swing high to swing low, swing high to swing low, swing high to swing low, swing high to swing low. Now normally as counter trend traders, we're looking for the market to retest structure and give us double bottoms, and you can see we have a valid double bottom right here, and you're gonna have to imagine that, you know, we're trading the market live, so you're looking at this. So a valid double bottom there. We had another valid double bottom right here, and as you can see, the market kept sinking down. Now fortunately for us, because of this experience and knowing how to read price action, we didn't get tricked or suckered into taking any of these moves, which would have resulted in at least 2 losses on this pair alone. We actually were looking for some trend continuation trades where the market came down to this double bottom, retraced back into the structure level before sinking again. And as you can see, the market did follow those predictions. Unfortunately, didn't give us a chance to get entered. So on the many pairs that were showing price action like this, we had a break-even day, no trades entered, which isn't a bad thing. It means we didn't lose any money. And like I said, a few traders did catch the Gartley pattern on Aussie dollar earlier and made some small profits. But more importantly, it showed the traders in the room how you can trade both ways. You know, today we had a trending day, and although we didn't get any trades, we did make a few trade calls that showed them, you know, how to handle themselves in a trending market and how to make money basically no matter how the market is moving. And more importantly, how to stay out of sucker trades like this.